This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, August 14th, 2015. Euro dollar. So the euro has been well bid over the past several sessions, with the market now contemplating a fresh upside extension beyond recent resistance at 112.15, which also happens to coincide with the 61.8% fib retracement off of the May high to July low move. At this point, a break above 12.15 would open the door for fresh upside into the 113s, though the market is expected to be well capped on rallies in the 113s, possibly around the 113.25 area, ahead of a fresh downside extension eventually back below 108.10. Sterling dollar. So cable continues to consolidate over the past several sessions, though the market remains constructive with a potential higher low now in place at 53.50. Look for a break above 156.90 to open the door for fresh upside towards and beyond that recent 2015 peak that we saw at 158.930 further up. Dollar yen. So dollar yen saw a bearish outside day formation in Wednesday trade and then saw some inside day price action with nothing much going on Thursday. But overall, following that bearish outside day on Wednesday, there is risk for additional declines after the market stalled out above 125 and ahead of 125.85, that multi-year high that we saw from back in June. At this point, consider the possibility for deeper setbacks towards initial support at 123, below which exposes more critical support at 121.30 further down. Euro Swiss. So Euro Swiss has been very well bid over the past several days since the market broke out above some key multi-range resistance at 105.75. At this point, there's risk for upside beyond the recent highs at 109.62 and towards psychological barriers at 110 further up. Still, any setback should be very well supported by previous resistance now turned support at 106.90. Aussie dollar. So Aussie dollar has been content on consolidating over the past several sessions. We did see a brief break to fresh multi-year lows at 72.15. That's a 6-year low earlier this week, but the market was quick to rebound back into some familiar trading ranges. At this point, a break above 74.40, that recent high that we saw this week, could open the door for additional corrective upside in this market towards the 77 area, though any additional upside should be limited in favor of a resumption of the broader underlying downtrend. Dollar CAD. So dollar CAD put in a fresh 11-year high at 32.15 several days back and has since been slowly correcting to the downside. At this point, if we do see a break below support at 28.60, this could open the door for a more meaningful correction into the 126s, but ultimately any setbacks are viewed as corrective, with the market confined to a broader uptrend, looking for a higher low in favor of the next upside extension beyond 132.15. Kiwi dollar. So Kiwi's been consolidating just like the Australian dollar off recent multi-year lows that were set on Wednesday, and the market though has mostly been trading within this range over the past several sessions above 65. At this point, a break back above 67.40, which is initial resistance, would open the door for a more significant correction, potentially up towards the 70 area, though ultimately the market is locked within that broader downtrend and a lower top is sought out ahead of a bearish resumption below 64.70. SPX 500. So the S&P 500 continues to chop around, but is showing signs of the formation of a major top off record highs that we saw back in May. At this point, look for the market to break below the March low at 2040 to confirm and accelerate declines. Gold. So gold has put in a nice little recovery since breaking down below 1100 to fresh multi-year lows, with the market trading back above 1100. But the market would need to establish above the previous 2015 low at 1142 to really take the pressure off the downside, and until then, there's possibility of stalling out for a bearish resumption down towards that critical psychological barrier at 1000.